Hello everyone. Welcome back to our channel. If you're curious about how technology is reshaping our financial systems, you're in the right place. Today, we're diving into a fascinating topic that's becoming increasingly relevant in our digital age: central bank digital currencies, or CBDCs for short. Whether you're a finance enthusiast or just someone trying to keep up with the times, this video will break down what CBDCs are, how they work, and what implications they have for our economy. So, let's get started. But first, let me ask you this: what if the money you use every day could be fully digital, secure, and backed by your government? Sounds intriguing, right? Let's explore that idea further. Central bank digital currency, or CBDC, is a digital form of a country's fiat currency. Unlike cryptocurrencies like Bitcoin or Ethereum, which are decentralized and often volatile, CBDCs are issued and regulated by a nation's central bank. Essentially, a CBDC is the digital equivalent of cash but exists only in electronic form. Let's take a moment to look at some examples around the world to illustrate how different countries are approaching this concept. China has been at the forefront of CBDC development with its digital currency electronic payment, or DCEP. Since 2020, the People's Bank of China has been piloting this digital yuan in various cities, allowing citizens to make transactions through a mobile app. The goal is to enhance the efficiency of the payment system, reduce transaction costs, and even control capital outflows more effectively. As of mid-2023, over 200 million people in China had signed up for the digital yuan, showcasing its rapid adoption. Now, moving over to Sweden, where the Riksbank has been testing e-krona. With cash usage declining rapidly in Sweden, the central bank is exploring the e-krona as a way to ensure that the public still has access to a secure form of money. The trials began in 2020, and the results have shown a keen interest in digital currency among the Swedish population, especially among younger generations who are more tech-savvy. On the other side of the Atlantic, the United States has been more cautious. The Federal Reserve has been studying the implications of a digital dollar, focusing on how it could affect monetary policy, financial stability, and the banking system. In recent discussions, officials have emphasized the need for a thorough examination before moving forward. However, with rising interest in cryptocurrencies and the declining use of cash, the conversation is more urgent than ever. So, what are some benefits of CBDCs? One major advantage is financial inclusion. Millions of people around the world still lack access to traditional banking services. A CBDC could provide a digital wallet accessible to anyone with a smartphone, allowing them to participate in the economy more easily. In fact, the Bank for International Settlements reported that around 1.7 billion adults globally remain unbanked. A well-implemented CBDC could change that landscape considerably. Another benefit is the potential for increased transaction efficiency. CBDCs can facilitate faster and cheaper cross-border payments. Currently, international money transfers can take several days and incur high fees. With a digital currency, these transactions could be instantaneous and much cheaper, benefiting both individuals and businesses. However, there are also challenges and risks involved in implementing CBDCs. One concern is cybersecurity. As we've seen with various data breaches, the more digital our currency becomes, the greater the risk of hacking and fraud. Ensuring robust security measures will be paramount. Privacy is another issue. With CBDCs, every transaction could potentially be tracked by the central bank, leading to concerns about government surveillance and individual privacy. Striking a balance between transparency and privacy will be a significant challenge for policymakers. Finally, there's the question of how CBDCs could impact traditional banks. If people start using digital currencies issued by their central banks, it could lead to a reduction in deposits at commercial banks. This shift could disrupt the banking system, affecting the availability of loans and credit. It's a complex issue that requires careful consideration. So, where do we stand now? As of late 2023, more than 100 countries are exploring or have already launched CBDCs, including nations like Brazil, India, and the European Union. The International Monetary Fund has emphasized that CBDCs could reshape the future of money, but they also stress the importance of a thoughtful approach that considers the unique economic contexts of each country. As we move forward, it's clear that CBDCs are more than just a trend, they represent a significant evolution in how we think about money. Whether you're excited or apprehensive about these changes, staying informed is crucial. To wrap up, central bank digital currencies hold great promise for making financial systems more efficient and inclusive. However, they also present challenges that need to be addressed carefully. As we continue to navigate through these digital waters, it's essential to keep the dialogue going about how we can leverage technology to create a better financial future for everyone. If you enjoyed this video and learned something new, please give it a thumbs up and subscribe to our channel for more educational content. Also, leave us a comment below with your thoughts on CBDCs. Are you excited about the future of digital currency, or do you have concerns? We'd love to hear from you. Thanks for watching, and see you in the next video.